your friends, Don and Gino.
Your friends are back. That's right, your friends for over 3.5 years now, right here at the Vault Media Studios in Cherry Creek Mortgage. Mr. Don Gatling, Gino Fronti with the Don and Gino Real Estate and Finance Show.
Yeah, and I was ready to jump in because, just before we took off for a minute of a break, we wanted to talk about mortgage insurance. Don brought it up, and, about probably a year ago, I mentioned a particular case that I was working on, Don, and we talked about removing mortgage insurance. And, I'm sure you could find the show on donandgino.com. If you just go to the catalog, go to the YouTube channel, and you'll be able to find the show on removing mortgage insurance. There was one individual that I was absolutely sure was going to get their mortgage insurance removed without having to refinance.
Well, explain the guidelines of that, because most don't even understand that.
Well, and that's the unfortunate part, is the loan officer that did their loan in the first place said, don't worry about it. As soon as you get to 2 years, you'll be able to get rid of it as long as you have 20% equity. And that is the basis of it. That's how it's supposed to work. But
nobody's ever been bamboozled by, don't worry about that.
Well, the thing is, it's still their discretion. Ultimately, it's their discretion. It's not automatic. And this person petitioned to have it removed, and they miraculously, the loan happened to be sold right when that happened.
It just happened.
Yeah, so then the new lender says, well, we haven't held it for 2 years. We're not sure you're going to make the payment to us. Anyways, lo and behold, that was supposed to happen last November, and we're here now in August, and they still were not able to achieve it.
And we actually supported them trying to do it.
We did, because I wanted them.
Like, no, you're never going to get it. Let's just do your refinance and all that. We just said, no, if there's anybody who should be able to do it, I guess you're the one. Even though you did forewarn them, we haven't heard of too many people actually being successful at getting it removed.
But I felt they had all the pieces.
I agree.
I really did feel they had all the pieces. But anyways, I got a call from them a couple weeks ago, and they just got declined for the removal of the MI once again. And they said, you know what does it look like if we refinance? And what a great story is when we do all the math for them, we're going to save them $177 a month.
That's always good.
Okay, their MI was only $161, so we're saving them more than what their MI was. We're also going to be able to cash out $7,000 and put $7,000 in their pocket.
I think most people are pretty happy about doing a loan. You always think about, how much does it cost me? And they're going to come out with $7,000 out of their pocket and save $172 a month.
Yeah, they're going to come out with $7,000. They're going to save $177 a month, and the cost of the loan to them is only the price of the appraisal.
Sign me up.
Yeah. Ken sitting on the side going, where do I fill that form out? The bottom line is it's important how a loan is structured. And you always hear about all these internet banks out there throwing out these crazy numbers and stuff, but the lowest interest rate's not always the best option for you. And it's just like anything, you need to talk to a real professional. We got, like I said, in our office here we have hundreds of years of experience with all the people here that know what they're doing. And that's, of course, why we have Ken Harris here. He knows what he's doing. He's not the new kid on the block going, I can spell it. He actually knows it inside and out, and that's why he works with it. That's why all the professionals we have at APRG, the America's Professional Resource Group at aprgi.com, by the way. Go check it out. It's pretty good. You'll have a plethora of real professionals that are vetted and accountable to you right here in Santa Clarita. These you'll recognize the names. You go, oh, so I've heard his name, and I understand. And what's nice is there's a Vault magazine you can click on and subscribe to. We have our own magazine now that educates and entertains you. It is not a plethora of ads.
There's not one ad in it.
No. So it's just information that we feel that our goal is to provide as much information as possible. And that's what our goal is every week. So please go to donandgino.com. You can also click and listen and chat live button and join us here in the studio, because Ken Harris is going to actually explain what happens when you do a 1031 exchange. Because we talked about what it is, but not how it works.
That's what I'm here for.
So tell us what the flow chart looks like, right? Okay. We talked about you're going to need an accommodator. You still have your real estate agent. You identified a property. You want to do an exchange. It saves me on taxes. But how does that all flow?
I think the recognition of what could be a 1031 exchange is important when you're thinking of selling a property. So knowing what can be an exchange and just making sure it can help you. Some people come to me and it doesn't seem like they're saving that much tax. It might not make sense to them. So not everybody's a candidate, but of course I want every deal. But I'm not going to put someone into something that they don't shouldn't do probably. So we always tell them to talk to their CPAs, their tax attorneys, real estate attorneys to get that advice. So once you recognize it's a 1031 exchange and you want to set that up, you get the sale, it's in escrow, that's when we get involved. So we get involved in the transaction, we prepare our necessary documents, exchange agreement, assignment agreement, and we're waiting for close of escrow. As long as we have our stuff back prior to the close of escrow, we're ready for closing. Nothing needs to be notarized. We do get the deals that they want to close the following day. They call us the day before, and we get that set up for them still. So it's the rush deals. Don't be afraid to give me a call. We're going to get that set up. So the most important trigger date in a 1031 exchange is the date of close of escrow of the property you sell. So you close escrow. We mentioned the funds have to come to us. We have to hold on to the funds. Escrow wires us the proceeds of the sale. We park those proceeds basically and hold on to them to apply them towards the acquisition of their replacement property or properties.
And they're going to reiterate the FDIC insured
correct.
Account.
That's correct. Yes,
your money
exactly.
is very
and backed
safe
by First American,
yeah,
so your money's safe. And
right.
So we're going to hold on to those funds. And what triggers is your time frames in a 1031 exchange. The day you close escrow, we'll just say we close escrow today. You have 45 days from today to identify what property or properties you're going to purchase.
So you can choose more than one. It doesn't have to be the one.
That's correct.
Okay.
You can choose more than one, but you can't choose the entire state of California.
That's,
okay.
Yeah, that'd be
they
kind of
limit
handy.
you.
Yeah.
Yeah, exactly. So they don't want to make it too easy on us. I guess.
So it's like 2 or 3 properties, correct?
You could identify up to 3.
Okay.
Okay, at any value. Of course, when you do an exchange, though, you want to purchase of equal or greater value and of equal or greater equity in order to defer all your taxes. Okay, so you want to identify 3. You could buy one of the 3, 2 of the 3, or all 3, if you identify, and then we call that the 3 property rule that they give us to identify on.
Okay.
There's also another rule to identify on called the 200% rule. If you need to identify more than 3 properties, you go to the 200% rule, and that basically states you could identify any number of properties as long as the total combined value of all identified properties does not exceed 2 times the value of the property you sold.
Interesting.
Yeah. So it's basically you sell for $1 million, you could identify 5 properties for $2 million.
So if they can't add that up, you'll calculate that.
I'll help them out. Yeah.
Okay.
Yeah. Exactly.
I'm using my hands and toes here, but I'm not getting there.
Yeah. Exactly. So there's a couple rules to identify, and again, you do not have to buy everything you identify. So you could identify, have backups.
I tell my wife that all the time.
Yeah. Exactly. Exactly. Not a good window shopper?
No.
So basically, you could identify more than what you're going to buy, but at least you have options. Because once the 45 days passes, you cannot change your identification. You're stuck with what you identified. So 45 days to identify. Once you identify, you do not have to be an escrow or contract, although it may be beneficial. It's recommended because if you go in blind on day 50 to put offers on these properties and they're no longer available, then you're stuck. Then you're going to have a failed exchange and have to pay your taxes. So timing is key on 1031 exchange. Then going back to the 180-day rule, you have 180 days to purchase what you identified within 45 days.
Okay.
But it's not 45 plus 180. So again,
so if you identified the 2 or 3, you have 180 days to decide which one you're going to purchase it.
Correct.
That's nice.
And you could close day 1 or day 180.
Right.
Yeah.
But you have some time. It isn't like you have to.
Yeah.
Yeah.
I think the most difficult time probably is the 45-day identification period. Yeah, exactly. Yeah.
So
but one thing you could do though is you could be in escrow on a property you're purchasing prior to closing your sale.
Yeah, we should go and so you can do it backwards.
You could do it backwards. You could do a reverse exchange.
How about that?
Yes, a reverse exchange. Yeah, so you could
my
buy
wife
first.
disagrees.
But much more complicated, a little more expensive, but it's something that you can do. It's a good tool. Some of my big clients prefer that because you don't have the 45-day
takes a lot of stress away.
Identification period. Yeah, exactly.
All right.
So
well, we've had Ken on a number of times, Don, and I think every single time he's ever been on, he wants to talk about what happens when there's seller carryback financing.
We got one more segment.
That's what I'm saying. I'm saying I promise that next segment we will talk about seller carryback.
Yes.
Otherwise, I won't hear the end of it till the next time I get him on.
Exactly.
Maybe that's the way he's securing himself coming back on.
Exactly. You invite me back.
Just leave a little carrot.
Yeah.
Yeah. He walks out of the room. There's a carrot sitting on
Exactly.
desk here. I'm like, oh, from Karen Harris.
Exactly. Exactly.
Why don't we, before we close out, tell them how to get a hold of you, buddy.
Call me, 818-307-0085, or email me at Harris, Harris, at firstam.com.
Very cool.
Yeah.
And Furman's probably got that information up at donandgino.com. Click on the listen chat live button because this is live. You'll see video. We got You know, Furman's got 3 HD cameras in our studio here watching what's going on, and you should too. Don't go away, because we're going to talk about what we've been waiting for a long time to talk to Ken Harris about when we come back to the Don and Gino Real Estate Finance Show on your hometown station AM 1220 KCS. Don't go away.